Hello dear students, today we are going to learn about generally accepted accounting principles. Our learning objectives in this topic is business entity concept, money measurement concept, dual aspect concept, going concern concept, accounting period concept, accrual concept, realization concept and cost concept. Accounting principles are the basic foundations, basic rules, regulations where accountants must follow while preparing accountancy of a business concern. Now, I welcome you all to Jayanti's Academy of Commerce and Management. Without any delay, chalo, let's get started to the first concept, business entity concept. Here, the business entity concept treats owner as well as business as two different separate entities. Okay, so please keep in mind that owner is different, entity is different. According to this concept, accountant will treat owner as a different person from business. Okay, why such like that? Why it is like that? You may get a doubt. I'll explain you with a example. If owner withdraws the amount, invested amount from the business, treating that amount belongs to his own money, then how business will work? If he keeps on withdrawing, then what is the use of doing business? Right? So there should be different category and owner will be liable to pay back the amount. So in this concept, it is explained that capital is treated as a liability of business invested by a owner, and whenever he withdraws the amount, he shall be liable to pay back the amount. That's why business and owner are treated as a two different people according to generally accepted accounting principle. Next comes money measurement concept. According to this concept, the company should be recording only those transactions that can be measured or expressed in monetary terms on the financial statement. Only monetary terms are recorded. Example, recording of transactions. What is the quantity of sales, quality and quantity of sales, purchases, everything. How much rent we are paying, how much salaries we are paying, how much commission we are receiving, how much interest we are receiving, everything, all those transactions are measured in terms of money. And next we create income reports. Okay. And there are certain items which uh, it is not included in money measurement concept, like we have market conditions, technological changes, the efficiency of management. These things are not recorded in money measurement concept. Why? Because those are subject to market risk and those are qualitative matters, right? That's why we don't include them in under money measurement concept. Is that clear? Third concept, we have dual aspect concept. It is a fundamental accounting principle that states every financial transactions has two equal and opposite effects. For example, I am speaking, then what you people are doing? You're listening, right? In the same way, according to this concept, there are two things. One is debit, another is credit. For example, if I am giving you something, then what you people are doing? You are receiving something, right? So for every financial transaction, there has two equal and opposite effects. You pay fees to the college and college will provide you education. There are two things happening. Same way, in every business concern also, when one person is selling something, what the other person is doing is purchasing. So there are two things, debit aspect, credit aspect. Okay. Fourth concept is about going concern concept. In this video, you can see the animation effect, the positive vibration where people are getting forward. In accounting language, an accounting principle that assumes a business will continue to operate and meet all the things. See, people may come, people may go, but company remains constant. Example, you can take an example of recent times. Ratan Tata got expired. But do you think Tata consultancies or Tata group of industries will stop working? No. People will come, people will go, people may change, but company remains constant. According to this concept, according to generally accepted accounting principles, it is said that company remains, you know, live till it is liquidated by the government or shed down by the government. Okay. So going concern concept says that company organization remains live. People may come, people may go, and the business is done for long term process, not for short term. Nobody thinks that company will wind up today, tomorrow. Everybody thinks that company will sustain at long run. Okay. Fifth concept, accounting period concept. According to this concept, it is assumed that accounts are prepared for 12 months. Okay, 1 year. So, our accounting period concept represents an accounting year which starts from 1st April of present year to 31st March of next year. Example is given on the screen. Say for example, 1st April 2024 to 31st March 2025 is treated as a accounting period year. You can take another example. During banks, 1st April is treated as a opening year and 31st March is treated as a closing day, last day of financial year. Okay, so whoever asks you what is the accounting period year or financial year or current year, you have to say that it is from 1st April to 31st March of next year. Clear? Yes. Take a screenshot or write in your book, maintain it, learn it, revise it. Clear? Next comes sixth concept, Accural Concept. An accrual is a record of revenue or expenses that have been earned or incurred. Okay, but haven't yet been recorded in company's financial statement. What it explains, it says that whatever revenue or whatever expense has been earned or incurred should be recorded irrespective of amount received or not. Okay, you have to record that revenue has been incurred, revenue has been written, should be written in your accounts that this much has been earned, but irrespective of amount is received or not. Immediately you may not receive amount, but in near future you may receive. That's why we write examples, no, like bills receivable. What is the meaning of receivable? Not yet received, yet to be received. So, what are your future receivable amounts? Should be recorded in financial accounting, which is called as Accural Concept. Seventh concept represents realization concept. The realization concept is an accounting principle that states that any change in the value of asset need to be recorded when business realizes it. Means what, ma? Example, revenue should be recognized at the time when goods are sold or services are rendered. Okay? Next, last concept is about cost concept. According to this concept, an asset is ordinarily entered in the accounting records at the price paid to acquire it. Okay? Means whenever you purchase an asset, you pay the amount. It is like acquiring cost. It is like purchasing it. So at the time, for example, 10 years back you have purchased a land which cost you around 30 lakhs. So you will record in your books that you have purchased land for 30 lakhs, but you cannot write market value because every day market value changes according to time. So for example, today you are purchasing land for 50 lakhs or 1 crore. You will record in your books, accounting books, that you have paid 1 crore of rupees and you have purchased a land. But you cannot write future value, market value. Okay, now because it is flexible, it keeps on changing. Cost concept says that an asset is ordinarily entered in the accounting records at the price paid to acquire it. With this, we'll end this topic for today. And for more knowledgeable lectures, please do like, share, and subscribe Jayanti's Academy of Commerce and Management. Then keep watching, keep loving. Take care.